Hey guys, welcome back to another weekly recap. This is where I recap all my trades for the week. This is for the week starting the 19th of January. Um, yeah, let's get straight into it. So I had a pretty decent week. I had four trades, two break-evens, one win, one loss. So not too shabby. But yeah, let's get into it. So I have been changing my strat a little bit in the background, and this video is really going to showcase it and any videos going forward. But now I pretty much I rely on the 5 and 15 minute a lot more in comparison to just like the 4 hour or the daily. Um, I use sort of the 1 hour, 4 hour daily for my bias and insane draws and liquidity, and the 5 and 15 minute is sort of my like reasons for price to move and reactions and etc. So yeah, let's get straight into it. So this first trade was on Tuesday, the 20th, straight after market open. So what's happened is we have market opened, we have tapped into a 15-minute gap. As you can see, we take out London high and tapped into these two gaps. And we had a very nice sort of reaction out of it. So obviously we took London high, tapped the gap, came down, we tapped into a fresh 5 minute gap that we had just created. And this wick is a very strong reaction that price does not want to go further down and it wants to bounce off of it. So then after that, that signals that price wants to long. Okay, so after that, I will then look for an IFEG and I will enter on the highest time frame. So in this example, we have just a singular 1 minute and I'll enter off the 1 minute. Now I entered here, I got a good fill. ES has not inversed yet, but I actually don't care about that. If the context is key and there's a lot of goodness showing, then I won't care about ES inversing. And this is practically a perfect trade for me. So it's just a simple 1-to-1. My stop is at the bottom of the body of the leg, and luckily for me, a 1-to-1 is actually this high, which is the 15-minute intermediate high resting above inside these two fair value gaps. So obviously enter there, and if you wanted to, you could have entered a minute later because ES actually did end up inversing. So yeah, but then I went break even here. The reason I went break even here, so obviously I don't care about these two highs or this high right here, just because it's not significant. Yes, it is a swing high technically, but it's not within a fair value gap and it's just not important. I wouldn't expect price to tap that and react off of it negatively. Okay, so I'm not going break even here, but I am going break even because ES has taken this high, and on the 15-minute, ES has now tapped into unfilled fair value gaps. So that could cause a rejection. Obviously, ES is NQ in a nutshell. So if ES reacts negatively off of it, NQ will also. And unfortunately, yeah, literally next candle I get stopped out at break even, of course, which is unfortunate, but it is what it is. And if you stayed in the trade, you would have actually caught this W, as you can see, very nice. So this is exactly what I wanted to see. So it's very annoying, but in no way am I regretting going break even. I'm very glad I went break even. 9 times out of 10, that would have stopped you at break even and then continued lower to your stop or whatever you wanted. So yeah, very good execution, very good trade. Simple 1-to-1, but yeah, obviously just break even. But yeah, the strat is very, very simple. It's just you just look at the 5 and 15 minute and rely a lot higher on it now. Okay, cool. So we can jump into the next trade. So it was on Wednesday the 21st at 9:43 a.m. Okay, cool. So we have just a singular 1 minute gap being inversed with amazing displacement. ES also does inverse on the same candle, which is amazing, great confluence, but it's not, once again, not something I absolutely need and look for. Now, just a note, on this day, Trump was speaking. He was speaking until about like 10 or 10:30 a.m. So going into the session, when Trump is speaking, I'm always very aware of it, and if a amazing setup presents itself, I need to protect my capital. So for this, I risked a lighter. Lots of people avoid trading when Trump talks, and I don't blame them at all because it is a bit of a gamble. However, if a amazing setup presents itself, I will enter it, but obviously just lighter. But of course, that is just everyone's discretion. That's everyone's different. That's my preference. You might have a different preference, but it's whatever. So For this trade, we had taps into an unfilled 15-minute. As you can see, price coming up, create this 15-minute, and we come down. Once again, we have a very strong wick. This is telling me price wants to long and go higher. Also, we have a very nice SMT of ES. As you can see, that same fair value gap. SES has not tapped into it, and NQ has. So this is a fair value gap SMT. Very, very nice confluence for longs. Of course, we have just a singular 1 minute and insane displacement. This is exactly what we want to see. Now you might see that on my indicator, we're actually inside of this 2 minute and this 4 minute. So you're probably thinking, oh, why would you enter? Because you're inside of gaps. Well, actually, no. This swing high right here, the one I've got this dark blue line on, is the intermediate high for the fair value gap. So as you can see, this 4 minute is created and then this high is resting within that. Same with the 2 minute. Okay, it's created and the high is resting within it. When you have a wick or a candle, whatever, inside of a fair value gap and it's not inversed yet, before you get to that high or low, obviously, it is irrelevant. You are not inside of this 4 minute. Right now, where price is, it is not inside of this 4 minute gap, okay? But as soon as we cross over this wall, if you want to call it, or wick, or whatever you want to call it, swing high, we are then inside of that 4 minute. So for that exact reason, as soon as price comes over this wall or taps this swing high, this dark blue line, I'm going break even. Obviously, same for ES. As you can see, this swing high here with this green line, which is obviously equal highs, it is inside this 1 and 2 minute. But as you can see, the 1 minute is created here and this wick is going over it. Same for the 2 minute, created here and this wick is over it. So imagine it like a wall, and on stream we like to say no man's land. As soon as you cross over it, you are in no man's land. Price can react very negatively, it can respect it and bounce off, or it can disrespect it and go through. But in any way, that is when you want to go break even, or maybe take some profits, or whatever you want to do to protect your capital. So if we play price out, so okay, there we go, boom. So perfect correction. This is exactly what we want to see on a trade like this. So prices taken my break-even point on NQ, but also ES. I don't know who it took first, but whoever it took first, I'm putting my stop to break even. Of course, to protect my capital, because after tapping this, price can easily respect it and bounce off and hit my break-even point or my stop loss. You have no idea what price is going to do. Okay, you can just react to what price is telling you. Of course, I was just holding this high. Obviously, this high was a 15-minute intermediate high. Obviously, it's showing you the whole candle, but as you can see, this is where the line is drawn, and it is within these fair value gaps, which is very nice. The more fair value gaps the high is resting in, the better. So yeah, play price out, and boom, TP smashed 1.1R for me. Very nice. Yeah, this is just a very clean trade. Once again, we look at the 5 and 15 minute for confluence. We tap into this 15 minute. Okay, now I'm reacting out of a 15 minute. I want longs. What am I looking for? A 1 to 5 minute inverse. We get this very nice 1 minute inverse. We have great displacement with a break even point. Okay, we enter it. It is just rinse and repeat for that method. Okay, next on is 22nd Thursday at 9:37. Okay, so here we go. Okay, this trade is pretty decent. Basically, of course, once again, we have tapped into a 50-minute. As you can see, market opens, we tap into these 2 15 minutes, which is just amazing. And once again, we have a very strong wick. So I'm now looking for longs. I go on to the 1 to 5 minute chart and I look and see we have a singular 1 minute gap and we inverse with great displacement. Amazing. My break-even point is this dark blue line right here and these gaps. Why? Well, because we have a 4 minute unfilled gap resting there. So as soon as price taps into that, price might respect it and bounce off, etc., etc. You get the gist. It's repetition a lot of times. But yeah, I just really liked this sort of instant reversal after taking it. Also, I'm going break even first if ES takes this high. The reason why is because this high is within a, as you can see, it's gone past it. Oh, it's gone past it, but this blue line is where it originally was, and it is within a 15-minute gap, as you can see. So of course it is an intermediate high. It is a valid point of interest, and price could easily react badly out of it. So if we play price out, Here you go. ES takes the high, so I'm now break even. And then the next candle, price wants to dump, and there we go. So if you didn't go stop loss to break even at ES taking that high, of course you would have lost to this trade. This was a break even trade, of course, for me. But yeah, and this is the importance of going break even and looking and listening to ES. If you remember the first example I showed you on the 20th, the first trade I showed you this video, I went break even at ES high and the trade ended up actually winning. So you were probably thinking, oh, no, you shouldn't listen to ES because you missed out on a win. Well, no, because if I didn't listen to ES in this example, I would have lost. So perfect example of why ES's correlation is key and you should listen to ES. But it's just knowing when to and when not to. Cool. So yeah, pretty decent trade. I mean, better structure would have been better if we, maybe had a little retrace. Like here, we reswept the low. We could have come back up, had a nice little 1 minute inverse again, and then had a better inverse. As we don't just want a straight dump and V-shape like that. We want to create some better structure. Maybe on a downtrend we come down, sweep the low again, and then we can bounce off of it like this. Whereas obviously we just have a straight dump and a V-shape. Exactly what I've drawn here. Okay, so structure is very, very important, but nonetheless it's a break even. I can't really complain. Okay, and then fast forward to this trade. This was the last trade of the week and actually a loss. Here we go. Okay, so yeah, of course, as you can see, just played session out. Session has been pretty weird. It's just been very bearish for the market. We've just been selling off. No real retracements or anything. There was this small retracement here, and you could have entered off of this gap here. I think this inversed all of it. Yeah, so this was just a singular 1 minute. And you could have entered here. Yes, you could have, and this does not look like a bad continuation short. However, for me, I want to need to tap into a 5 or 15 minute gap. And as you can see, and it doesn't matter on which pair, even if ES taps into it and NQ doesn't, I'm still very interested in the trade. But in this moment, they haven't. ES has even created a fresh 5 minute, so there's no way I would take this trade because we haven't tapped into anything yet. We've only tapped into 1 to 4 minutes, but that's not good enough confluence for me. Okay, but I know lots of people that did take the trade, but it's whatever. But also at 10 a.m, where I've just drawn this blue line, we actually had red folder news, and you would have entered at 9:56. Like 5 minutes before red folder, it is never a good idea to enter, just because usually price slows down, but also as soon as 10 a.m. hits, price will do whatever it wants. So it's very risky to be in a trade during that time. Of course, in this example, it actually ended up working out and going in the direction that, of course, you would have wanted price to go in if you entered shorts here. But when news hits, you have no idea if price will go in your direction or it won't. It's genuinely a gamble. People often say that, it goes in the direction of bias, but a lot of the time it might do, but it is not a guarantee. And it is literally a gamble. You might as well go to Vegas if you're going to trade a news. Of course, if you're full point an eval, then that's completely fine. But if you're trading a PA account or seriously trying to trade, then it is not a valid way of trading. Excuse me. So yeah, I didn't like this short, but I know a lot of people did take it. And obviously, with the news, even if this did tap into a 5 or 15 minute, I wouldn't have taken. But if there was no news, I still wouldn't have taken this. But I don't think it's a bad play. But personally, I like 5 or 15 minute reactions. And yeah, cool. So let's go into this trade. So here we go. So the reason I like this trade was because, so we're obviously a bit more bearish on the day. Obviously, we have just sold off. I mean, how many points since open have we been selling? We sold about 200 points off open. So very clear bearish market right now. Obviously, we chopped for about 10 or 15 minutes, but then this little spike up, what did we do? Well, we tapped into this 15-minute gap. Okay, we had a very nice, strong rejection wick out of it. So that's telling me price wants to continue lower. This swing low we've got in the market as well is also resting within this 15-minute gap. So we have a very nice break-even point. ES also has the same. As you can see, if I go back to it, it's actually an unfilled gap. It hasn't actually tapped into it. So that's even better of a draw of liquidity. So I enter here. The reason I don't enter on the candle previous is because this is a 1 and 2 minute. And as you can see, the 2 minute has not inversed yet. but on this candle it does, as you can see, 561 and 561. So this is where the 2-minute inverse is. So obviously I enter on the highest time frame inverse from the 1 to 5 minute. This example, it's a 2-minute. So I entered here, my stop was at the top of the body of the leg, and I'm just targeting a 1-to-1. I could have targeted, I believe, there was another unfilled gap here, but it was obviously it was a filled gap, intermediate low. I could have targeted this for a 1 to 4.7, but the reason I wasn't trying to target that is because price already moved so much since market open. Expecting it to move another 62 points is pretty crazy. I just want to stay humble and get a nice simple 1-to-1, get my piece, and then get out of the trade. So yeah, enter this trade, and unfortunately it is a loss. There you go. I was very close to thinking price would reverse. Literally, it was actually really funny. I was in the trade, and it was literally like a point or two off of getting stopped out here from this wick. And then price started to reverse, and I was like, oh my god, there's no way. Of course, though, in this moment where price is like right here, in no way am I putting my take profit to break even, or am I sizing down, or am I exiting out of the trade early? No, I entered this trade because I believed in it and I had confidence in it. Okay, and I managed my risk effectively. So I'm very, very happy with a loss here. And that is exactly what you should be doing when you trade as well. You shouldn't see chop during your trade or anything like that and then think, oh, I want to get out of this. I'm not enjoying this. Okay, of course you don't want to see chop, but you shouldn't then get out of the trade because of it. You should let the trade do its thing and just let it happen. But yeah, of course, price ends up hitting my stop, and this is a loss. Pretty unfortunate, but it is okay. It's a very happy loss. I followed all my rules. The only thing that was really bad about this trade, in my opinion, is just that we had such a level of chop, and we're obviously we're inside of chop. When you trade IVGs, chop is never really a good thing to trade. I just personally really liked how we broke out of this range, tapped into the 50-minute, and had a strong reaction downward. But it's just a thing to note. I mean, this is probably not a high. Like the win rate on these trades is definitely worse than a regular trade, but it's definitely not extremely low. It's definitely a good win rate. But yeah, it's just a cheekier play. But it is what it is. Managed my risk effectively, and that is what matters. I only lost exactly what I wanted to lose. So yeah, that's pretty much it. Some people took this long straight after it, right here, when it inversed this gap. Right here, this 1-minute gap. I did not like this, however, because once again, of course, we're in chop, so it's sort of the exact same thing as the short, but also we're not re-tapping into any gaps. We haven't re-swept the low at the 15-minute on either pair or anything like that. If this wick were to come down and re-sweep that low on either pair, then this long looks very good, and I would definitely be interested. But yeah, we just haven't done that. We've also taken this higher on ES, so it's just not a very key, very high play. But of course, this ends up winning. But that is just trading at the end of the day. But yeah, risk management is key. Yeah, that is it for the weekly recap. That's all I took, just 4 trades. Pretty alright week. This January has been very interesting. Definitely the worst month I've traded. And I know a lot of traders and traders. Sorry, I've been watching traders. I know a lot of traders and content creators have been saying that January is just the worst month due to all the stuff that's going on in US or the news and everything like that. But hey ho, it is okay. Yeah, you just got to think to keep your head up, and if you take a loss, it's okay. Manage your risk, journal it. See what you did wrong if you did. If you followed all your rules, realistically, you didn't take a loss. You took a W. Okay, that's what you got to think about. If you are following your strategy to the T, then you are completely fine. Okay, I have a 70% win rate for a reason. I am meant to lose 30% of the time. If I take 10 trades and they're either wins or losses, I should lose 3 times. Okay, so I shouldn't get upset if I've had 7 wins in a row and then my 8th trade is a loss. That should be, I'm happy about that, because it's just the way the world works, right? That's what you got to think about. So yeah, thank you very much, guys, for watching. Of course, I upload these weekly. In the comments, let me know if you want to see anything else, any other forms of content or anything. Of course, join the Discord. Link will be in the description, as well as my socials. But yeah, we live stream every single day. We live streamed all of these sessions. So yeah, I'll hopefully see you in that on Monday, which is tomorrow actually. So yeah, hope everyone had a good weekend, and I expect to see everyone tomorrow, 9:30 a.m. Eastern time for the stream. But yeah, thank you guys for watching, and I'll see you in the next video. Goodbye.